Some of the essential rules that I have is first, let's say risk management. Let's just start with there. The highest that I told you that I'm going to be risking per trade is 1%. So something that I wrote in my rules is that in every trade that I enter, the maximum risk that I'm going to be taking in the market is going to be 1% of my account, and the lowest is going to be 0.5%. At the end of the day, we are here to make money. Now you cannot just maybe you are going to be risking a 0.01%. That doesn't make sense. In forex, I was trading two pairs, which was GU, which is the British Pound USD, and the EU, which is the Euro USD. Now, I usually trade the Asian SIP liquidity, whereby the strategy now that I borrowed from ICT was, there was a time in core content where I taught about SMT divergences. Now, during my 4-month period after studying ICT, I was doing forward testing. Now, something that I came to learn was that sometimes
Traders, ladies and gentlemen, this is the Top Dollar Trader Podcast, and I'm your host, Omari. So, we are talking trading and everything in between those lines. And today, ladies and gentlemen, I'm excited because I'm joined by this one trader whose transparency I think is second to none. Because what he has done is that he has documented the whole of his trading journey and he has it public for everybody to see that. So whether he's hitting a loss or he's hitting a win, he has that online so that anybody can be able to track and see what he's doing. So he's here, but before we get into that, I want to thank all those people who are supporting me and continuing to support me. And if you want to be among them, you can also do that by hitting that subscription button down there. So having said that, ladies and gentlemen, I want to invite and welcome Mr. Ray. So Ray, how are you feeling today, man?
I'm doing good. Thank you very much for inviting me today. Uh, so my name is Ray, and I'm a trader. Recently, I was a forex trader, but recently I transitioned to indices. But yeah, so thank you for inviting me. Let's see how it goes.
Yeah. So I also want to thank you and appreciate you for logging in. I don't take it for granted. So we want to just kick it out. So you have told us you are Ray, but give us some little more background about yourself. Tell us like maybe for how long you've been trading, where you are at or where you live. Just some basic stuff here and there, so that maybe people can understand who we have here today.
So yeah, so I got introduced into trading like end of 2022 by my brother, but the whole of 2022 into 2023, end of 2023, I did not really take it serious. But towards the end of 2023, that's when I bumped into ICT. That's the strategy or the mentor that I use. So I studied ICT for at least 1 year. Towards the end of 2024, that's when I started to trade live. I had found a good strategy to use. Now, yeah. So going into 2025, the whole of this year I've been trading. I've been trading since January until now. And yeah, it's been going well, a little bit of ups and downs, but yeah, some challenges here and there, but nothing we can't manage.
Interesting. So you have talked about ICT. You are trading ICT concepts, but in between your journey, that's where you bumped into ICT. That's where you discovered ICT.
Yeah, yeah.
So before you were using ICT or before you were studying this ICT, so what are some of the things you were looking at, or which mentor were you under?
I did not have any mentor before ICT. I was just logging into YouTube and just watching random videos. Any video could work. I was just using random strategies. But yeah, I did not really take it serious, but until I found ICT, that's when I started taking trading seriously. I almost entered into trading signals, but yeah, I eventually just found ICT. Yeah.
So signals, you have talked about signals, but I think when you are new, signals is part of maybe the initiation into forex. Most people, before they find that skill, then they have the appetite for money. They may find themselves into signals here and there, but it is all the same. It is part of the process.
Yeah.
Then now talking about ICT. ICT, I have also studied ICT, and I know that he has produced a lot of content. He has a voluminous amount of information on his channel for people to study and everything about forex. And now being new, it can be very confusing, you see, because one video is like 2 hours, then there are a lot of them. So for you, I'm now curious, like, how did you get into studying all these materials? Did you have like something like a classroom setup where you partitioned your time, ukasema like, now I'll be studying this theory, then I will be, looking at charts at a certain period. Like, how did you approach learning ICT, and how was the whole process like?
So I was a little bit fortunate to find ICT because someone who introduced me to ICT was my elder brother. He was already, I think, 5 months into ICT, and he told me that ICT was legit. So he told me that you can just go into YouTube. There is a guy who taught us on how to watch ICT. So I started I started watching ICT from core content. I was a little bit fortunate because he made his content free on YouTube. So I started with 2022 mentor, not 2022, but the 2016-17 core content. Then studied that for around 6 to 7 months. Then entered into finished with the 2022 content. Now that's when I finished ICT. And yeah.
Yeah, so it is very funny because you have talked about your older brother introducing now you into ICT. Then it is a very ironic experience because on the other side, for me, I was also introduced to ICT now by my younger brother. You know, it's a funny coincidence there.
Oh, yeah.
But that is very interesting.
Yeah.
So you studied the ICT for 7 months.
Yeah. Yeah.
That is a considerable amount of time, because now many people, especially beginners who are getting into this forex, they may not know the amount of time that it will take you, to master maybe ICT or trading in general. Somebody may think that you can be in the market, then in 2 weeks you are able to grasp this skill, then you are able now to start pulling money from the market. So from your experience and in the learning phases, from where you are then until where you are today, like, what is the reality of learning about trading or ICT? How much time should somebody who wants to get into this, yani psychologically prepare with? How long? Is it 1 month? Is it 1 year? Is it 5 months? For you, anafa prepare psychologically with how much time?
I think for me, in my opinion, ICT is a very broad concept. It is a lot of strategies that you need to go through all of them, then filter out the strategy that really works with you. Now you see, I was trying to balance ICT with school because I'm still in campus, and then I was, I think, in second year. So when I came back from school, I was studying. I usually study one video per day. You see, per video, ICT usually releases a 2 hour video. Now, at the
Yeah.
beginning, I was trying to finish it quite fast, but I was told that you are going to be burnt out because that's the truth. But yeah, going through ICT core content, I think you should allocate at least 6 months studying ICT, then another 3 or 4 months in order to get a good strategy that works for you. So yeah, think maybe let's just say 1 year, 1 year to study ICT, a good strategy that works.
So maybe the last on ICT, ICT, there are several concepts. There's the 2022 model, there's the silver bullet, there are several strategies that he has exposed. Like for you now, having gone through that, are you using all of those strategies, or you narrowed down to one, or you just took his concept, then took something else that you related with, and that is what you are using today? So, what is your style in terms of the strategy you are using now? How is it informed?
So I'm just going to start first because I recently transitioned from forex to indices. I'll just start with the one that I was using in forex, which was in forex I was trading two pairs, which was GU, which is the British pound USD, and the EU, which is the Euro USD. Now, I usually trade the Asian sweep liquidity whereby market opens at midnight EST, which is the Eastern Standard Time. Now I wait for Asian law to be taken. Then the strategy now that I borrowed from ICT was there was a time in core content where I taught about SMT divergences. Now during my 4 month period after studying ICT, I was doing forward testing. Now something that I came to learn was that sometimes GU can take out Asian law, but EU can fail to take out Asian law, which forms an SMT divergence between the two. Sometimes I usually correlated it with the dollar index. Now, whether it's bearish, I wait for when the market is bearish, I wait for maybe Asian high to be taken on one of the pairs, and then maybe EU, and then GU to fail to take out the Asian high. Now, something important that I really learned from trading forex was to implement the higher time frame bias. That helped me a lot when trading forex. But recently, when I transitioned to indices was a little bit clearer for me. Now, the strategy that I use on indices is that first I wait for the market open, which is the AM session. That's the 9:30 PST. So I usually look for liquidity sweeps in the market, maybe some relative equal highs with relative equal lows. So you see when the market opens at 9:30 open, typically the first 30 minutes of the market open is usually manipulation. So I wait for one of the liquidities to be taken. Maybe if the market is bearish, I maybe wait for the buy side liquidity to be taken. Now, my entry model is maybe if a fair value gap is left, maybe a fair value gap that was used to take out the buy side liquidity can be inverted, then I can use it as an entry model to just enter on the retracement, then a continuation to the downside. I usually just target liquidities in the market mostly. That's with indices. Yeah.
Hmm, that is, that is interesting. So that is your entry model.
Yeah.
So, like, you know, before you enter trade, there are the things that you have to see. You have talked about, either buy side or sell side liquidity be taken out. Then, you are waiting to see those fair value gaps. So, like, how is your ideal, that A plus setup? If you can break it down to us, what are some of the things that you have to see before you enter trade? What are some of these things that will give you the confluence and the confidence that now this trade is going to be an A plus setup?
Okay, let's start with when market opens at 9:30. First, I wait for a manipulation, typically from 9:30 open to 10 a.m., which I want to see where the market wants to go. So if market is bullish, for example. Now, during London session, sell side might be generated, and then buy side might also be generated, which are two liquidities in the market. So I wait for manipulation first, whereby sell side should be taken. Now immediately sell side is taken. You see, I always trade in the 1 minute time frame. Now I just wait for a reversal. I'll really describe myself as a reversal trader because I usually wait for a liquidity sweep in the market, then wait for a reversal. Now I my entry model is using inversion for value gaps. You see, so let's say market is going for a sell side liquidity, then there is a fair value gap that was used maybe as a breakaway gap or a bearish fair value gap to the downside to take out the sell side liquidity. Now, for a reversal to be really viable for me, is maybe that fair value gap to be inverted. First, I usually use the bodies of the candles. I don't really use the wicks of the candles. Now, a close above the fair value gap. Then I want to see a reaction when price retraces into the inversion fair value gap. If it's going to disrespect the inversion fair value gap or it's going to respect it. Now, when I use the bodies of the candle, usually when an inversion fair value gap is formed in the market, now the retracement, the bodies of the candles usually respect the inversion fair value gaps. Now I just wait for a retracement. If price respects it, I just enter, then target the next buy side liquidity. Yeah. So higher time frame is very important.
So you do something like a top-down analysis
Yeah,
before you are given confirmations on the lower time frames.
yeah. I usually
So now, if yeah, what is your higher time frame? Are you using like the monthly, the weekly, and the daily, or your higher time frame is like maybe the 4 hour?
So in a week, I usually do first the pre-market week analysis, which is on Sunday. That one I use the weekly and the daily, and the lowest time frame that I go is the 4 hour when I do my weekly preview. Then, then during the daily, maybe weekdays, I usually my highest time frame to go is maybe the 4 hour, then break down to the 1 hour, then 15 minute, 5 minute, then I typically execute in the 1 minute time frame. Yeah. I'm just yeah, I'm a day trader. I usually scalp mostly. Scalp
Okay.
trades run from around. Yeah.
Yeah, in fact, that was my next question. Like on average, how long are you holding on to a trade?
So because I'm scalping a trade, maybe and it is the AM session. Trade might run for at most 1 or 2 hours, but after that, either the market has taken me out at stop loss or take profit. So yeah.
So now talking about stop loss and take profits. Like now you have done your top down analysis, then you have your A plus setup, then you have executed this trade. Then you feel that you feel very confident that this is going to be maybe a good trade. But now on active trades, how are you looking to manage these trades? Like if it goes to the green zone, it goes your way, are you going to have that trailing stop so that you can lock in some profits, or are you going to take out some partials? Like how do you do it? Or you just place your targets, then that stop loss, then leave maybe 8 of them to be triggered? So how do you manage? Do you micromanage it, or you just place, then leave it to chance?
So most of my trades I usually target a 1 to 2 risk to reward. So
Mm-hmm.
sometimes this is an ongoing process. I'm still learning from myself. So you see, if I enter a trade, so when I usually journal, maybe the trade that took me out at break even, most of the time it might just be a replacement into a bullish order block. then a continuation
Mhm.
of that side if it's a bullish setup. Now, you see, through my journal, I usually see that most of the trades that took me out at break even usually end up at my TP because I just target a 1 to 2. So whenever I enter, I just leave the trade to run. If it's going to be a loss, it's going to be a loss. If it's going to be a take profit, it's going to be a take profit. I just leave the trade to run. Yeah, that's
So it's like, you have already accepted the risk prior. So if it goes to your stop loss, you already accepted that if I'm going to lose this,
yeah,
tomorrow is another trading day.
yeah.
That is interesting. Then you have talked about journaling. I think journaling is to be a trader and to trade like a business, then you have to have your data. And this data, you can only have it if you are journaling, if you are keeping track of your activities in the market. So it is interesting that you are using a journal. And now I'm interested to know, like, in this your journal, what are some of the data that you are collecting, and how are how is this journal later when you are reviewing it, how is it now helpful to you? Like, what things have you discovered, then from those things you have been able to improve, and it has been able maybe to elevate your trading skill. So the question is, which kind of data are you recording, and how are you processing that data?
Okay. Actually, this is how I found my strategy that I'm using right now. So let's just go through the
Okay.
indices only. So you see, with indices,
Mm-hmm.
I usually, because I've told you that I usually trade liquidity sweeps now, then enter on inversion fair value gaps. Now, when I used to journal at first, when I was entering a trade, maybe let's say I'm entering on a reversal into an inversion fair value gap for a bullish setup, I just enter on the
Okay.
retracement. I don't wait for maybe a candle close in order to see if the inversion fair value gap is going to be respected or not. So most of the time, the stop losses that I took, I just entered on the immediately on the reversal. Then the candle immediately maybe disrespects the inversion fair value gap and just goes to my stop loss directly. But through journaling, actually, I realized that if I just could wait for the retracement, then see how the market is going to react of the inversion fair value gap, and maybe enter on the candle that is going to be printed to my direction. Now, that's when usually the trade is going to play out quite well. Another thing is the break even and the taking partials part. You see, some of the trades, maybe a lot of the trades actually, when I broke them, maybe if I'm targeting a 1 to 2 or a 1 to 3 trade, then maybe I break even after maybe the market reaches half of the take profit that I'm supposed to be taking, maybe a 1 to 1 or a 1 to 1.5. Maybe I break even. Sometimes the market can come back, right, just take me out at break even, just go to my direction. That has happened to me most of the time. That's why I eliminated the break even part. I just enter into a trade and just as the market is going to do. Yeah.
Ah, nice. So now, there in recent times there have been prop firms, and they have promised traders, like, they are solving that capital problem. So are you also tapping into this opportunity of using prop firms, or you are just trading your own personal account? What is your style?
So with me, I see prop firms as a really great opportunity for traders because some of us start from
Mhm,
zero. Now we can't afford really to trade the personal account. You really need a big account to really earn some
mhm.
money. Now I usually use prop firms. Prop firms is really good. So yeah, prop firms is the way to go actually for most of the traders right now.
Ah, nice. Like, yeah, so you are trading prop firms. So maybe if you can share, which prop firms are you using? And, before you purchase a prop firm, maybe you do some research, see whatever you do. what is the process that you are doing before you get a prop firm, and how do you select now a prop firm that you are confident that this one will be able to pay you out? Because there has been prop firms cropping day in and day out. You spend your time trading, you spend your a lot of several months doing your thing, then when it reaches the moment of payout, then somebody just tell you you have broken a rule here and there. So what is your process when you are trying to settle on a prop firm? How do you do it, and which prop firms are you using?
So first, I'm just going to go through the best pro firms that I use. So you see, I'm currently using a pro firm called Got Funded, but some of the pro firms that I really trust is maybe FTMO first. There is FTMO, then there is Fivers, Funded Next, maybe they got funded. So something that you can really do in order to get a really good pro firm is there is a website called the pro firm match. That's where pro firms that are really reliable are usually displayed. You can just go and see on how they usually pay their customers, the reviews on whether the pro firm is a good pro firm or maybe it's just a bad pro firm. So yeah, they are usually ranked in the pro firm match. It's really simple to do.
Yeah, proper match. I have also interacted with that. In fact, I use it a lot of times when I want to purchase a challenge after maybe blowing one, or adding to my capital. But somebody, before you just buy a challenge, you should do some research here and there, because there are fishy prop firms, and the prop firm match, I think, it comes as a handy tool to help you do all those things. Now, you are using the code funded. You say it is funded, code funded.
Yeah, I just
Yeah,
recently
yeah, yeah,
since last week.
yeah. Yeah. So now you have bought the challenge, then you are on the challenge phase. Then on the challenge phase, you are now given a funded account. Like these two, what is your mindset when you are trading these two? These two, when it is on the challenge phase and on the funded phase, like, are you kind of aggressive on the challenge phase so that you can finish out with the phases, then get into funded? Then now when you get into funded, you now start trading conservatively, maybe going even 0.5%. Or, you, from the first moment, from the challenge phases to the funded phases, you are just, that there is that continuity. If you are trading 1% or you are trading 5%, you also continue that until you get some payouts. So what is your mindset between trading a funded account and when now it is in challenge phases?
Okay, let's go through first with the pro firm trading. Approaching a pro firm account and approaching a live account is really different. So you see, with pro firm, they have rules. They have maximum drawdowns, maximum daily drawdown, something that you can breach, lose an account. Now, since I've been trading for 1 year, trading a live account for 1 year, I'll just say with what I've experienced since last year. So you see, I bought funded next account, two funded next account. I passed one and failed one account. So you see, with trading, let's say phase one and phase two account, phase two, you see, I think you shouldn't be taking this really slowly. You can just be risking 1% because for me, I traded conservatively because I used around 6 or 7 months to just pass the phase one and phase two. Now, when I got into live account, I got into a little bit of a trouble, or let's say challenge, because I went through some losing streak. But yeah, I think approaching before passing an account, approaching the phase one and phase two, you should be a little bit aggressive. Maybe set a time limit of maybe 1 or 2 months to pass. Then maybe if you get into a live account, that's when you can be conservative and maybe use a one. If you get into drawdown, you could use the 0.5%. So yeah, that's how I think you can approach the program.
So, you know, generally, your risk management, like how are you doing your risk management on the accounts you are having, on the funded accounts? Like, you going in, are you still going in that 1%?
So you see, when let's say I'm trading the challenge phase, the phase one and phase two, I don't go below the 1%. I usually just trade a 1% per trade only. But when I get into a live account, let's say if I'm in profit, just be risking 1%. If I get into drawdown, I'll just be risking 0.5. I'll just go a little bit lower and risk 0.5. But in the challenge phase, I just stick to 1%.
Interesting. Now, there is another the more interesting thing, I think, because I went through your TikTok and I was very surprised because you are doing something that I think not most of traders online are doing.
Yeah,
Because if you go online, it is a happy place. Everybody is winning.
yeah,
Every day nobody is posting their losses, but you have a series of losses that you have hit. Then you are so open to say like you are experiencing a losing streak, all these things. So it is very interesting, and I'm curious, like, what informed this decision? Why did you decide that you want to be this transparent, and how is it helping you? Why are you this transparent?
So you see, when I started documenting my trading journey, I said that I'm going to be transparent on every trade that I'm going to be taking, whether it's going to be a win or a loss. So you see, a few like 2 months ago, I passed my phase two account of a 10K account in Funded Next. But something that you really can't predict is after immediately passing a phase two and getting a live account, is going through a losing streak. No one is, let's say, just few people are going to be transparent on the trades that they are going to be taking. But I just chose to document the trades that I'm taking. So you see, the last 2 months I've been going through a rough patch because I've been going through a losing streak. Now, yeah, I eventually lost the account, but this is just the reality of trading. You can just follow all your rules and just lose the account. But yeah, it's just part of the game, and this is why I'm showing people, because I usually receive a lot of DMs telling me that at least that you're documenting the losses, because I can see maybe it's just normal for eh, all the traders. So yeah.
Yeah. Yeah, what people forget is that you can't call yourself a trader, or you can't trade without hitting a loss. In fact, losses are part of the game, and not only part of the game, you may find that you may be hitting more losses even than those wins. And the funny thing with this trading is that you can still hit many trades but still make money if you are employing those risk to rewards, big risk to rewards. You can still, so many people shy out that from being transparent in showing their losses. Then they forget that it is part of the game. Even if you are through a winning streak, in one point in time it must be stopped by a loss. So that is very interesting. So you have also still in the losses. Now when you are hitting those consistent losses, how are you going to respond to it now? Like, are you going to leave the market for a certain period so that you can evaluate things? Maybe it is the strategy nini nini, ama you are still in the market but still trading, but now you are very conservative, you are very cautious. So like, that period you are experiencing a drawdown, how are you responding to these losses and the drawdown?
Actually, I'm actually glad I went through this drawdown early on in my trading career, because
Mhm.
because in future I'm going to be expecting, even if I'm hitting some wins, I might expect a losing streak. So because I went through this losing streak, aired out some things that I had in my strategy that really they were not supposed to be there. Some demos that I had, which is over trading, some breaking some of the rules that I had placed in my trading. So yeah, I think losing streak is as essential to bringing you back in line with your trading rules and everything. So yeah, sometimes losing streak can be positive. It depends on how you approach it. Yes, sir. So yeah.
Um, Now, in trading, you must have rules. And not only have these rules, you must have the discipline to follow these rules. Because now, if you don't have rules, then you don't have the discipline to follow these rules, then you may find yourself, you know, into gambling. You think that you are trading, but in the real sense, you are not trading, you are gambling. So, for you, like, what are some of the rules that you are using? And, how do you keep that discipline? How do you sit on your hands when the trader has not told you, when those rules have not told you enter the market? So tell us some of the rules and how you keep that discipline in following those rules.
Some of the essential rules that I have is first, let's say risk management. Let's just start with that. The highest that I told you that I'm going to be risking per trade is 1%. So something that I wrote in my rules is that in every trade that I enter, the maximum risk that I'm going to be taking in the market is going to be 1% of my account, and the lowest is going to be 0.5%. At the end of the day, we are here to make money. Now you cannot just maybe set maybe you are going to be risking at 0.01%. That doesn't make sense. So yeah, that's one of the rules. Another rule is going to be involving high impact news days. Sometimes I don't really trade. I tend to avoid those days, the high impact news days. Then because I'm trading indices right now, I'm going to be avoiding to be trading before 9:30 open EST. So yeah. Another rule is that rule of inversion fair value gap, waiting for it maybe to a retracement, then a candle close to a direction, then just enter into the trade. So those are just some of the things that I am following, maybe. And then higher time frame buyers. Sometimes I go against the higher time frame bias, so that sometimes costs me in my trading. But yeah, it's just a learning phase, something that you just learn and move on. So yeah, those are some of.
Yeah, very nice. So, fundamentals. How do you treat fundamentals and more especially on the economic calendar? You see, on different days, there are these news events, that happen in the market. Like, do you, shy away from those red folder news, or, because of the volatility maybe they present, your adrenaline is jacked up, so you anticipate to trade them. So, do you trade news or it is something you avoid?
So involving the high impact news days and something like CPI or NFP. So before I was trading forex, I usually avoided the days where there was high impact news. But because now I'm trading indices, usually the high impact news occur at 8:30 Eastern Standard Time, which is 1 hour before the market open. So usually the high impact news can occur then after 9:30 open, maybe price can become a little bit clearer. Now the days that I usually avoid is maybe the days before the high impact news. So sometimes maybe let's say tomorrow is NFP or CPI. Today usually price can be ugly and just consolidate. So maybe reduce my risk on those days. Maybe NFP days and the days before the high impact news days, I might just reduce the risk. But yeah, I usually maybe trade those days. But trading the news itself, that's something that I cannot do. That is one of the rules. I don't trade news. Yeah.
you totally don't like the volatility of those news events.
So my definition of the
That's
high impact
interesting.
news is that a high impact news is something that we just cannot control. That's when you get into the gambling mindset. So you see, this is when smart money really involve themselves into the market. They just inject the money into the market. Now that's when market really moves. No one can predict news, maybe unless you want to just put the money on the line and just hope and pray to God that it might into your direction. But yeah, no one can really predict the high impact news. So yeah, maybe trade after the high impact news has occurred. Yeah,
Yeah, you can hope, but at the end of the day, hope is not a strategy in the markets.
yeah,
You are praying, you'll do everything, but if it was going to be a loss, it will still be a loss. And if you are putting your hopes, it will now fuck you even bigger.
yeah.
Now, in terms of your trading plan, give us some insight into that, like, the number of trades you are taking in a day or cumulatively in a week, or the markets that you are watching, or, the risk to reward ratio that you are chasing. How are you doing that in terms of, your trading plan?
Actually, that is really important because something that we usually do as a mistake at the beginning of your trading career is over trading. So that's something that maybe I introduced into my trading rule. Trading at most, if I have to trade that day, at most I have to take at least two trades. Maybe the first trade was maybe a mistake or something that we just thought we saw in the market. Then the second setup is maybe the A plus setup. So yeah, uh, with my trading plan, at most I'm going to be taking at most two trades and at least one trade a day. So if I take the first trade, I lost 1% in the market. The second trade, I'm going to go down and just lose 0.5 of the original trade. So yeah, at most, but most of the time I usually just take one trade a day. If I take a loss, maybe wait for the next day. Yeah. So yeah, that's how I trade.
Yeah. Now, if we move back a little bit, there were times maybe you are not able even to get through the challenge phases. It was very hard for you to, maybe you are hitting more consistent losses. Then now, maybe through experience and, the time factor, you are now in a place where at least you are able to make some profits here and there. So, what are some of the things that you were doing back then that were really preventing you from making that progress? Then now, when you maybe worked on them, either by introducing these rules or anything that you did, that now they have placed you in a position where at least you are getting funded accounts, or at least you are getting payouts from these platforms.
So I'll just use an example of myself because I bought an account, a pro farm account this year, January, and I just passed it recently. So something that I used around for 4 or 5 months of that time period, it was a break-even phase. So some of the mistake that I really did that time was maybe if I enter one to three risk to reward trade, maybe I close it at 1 to 1 because of maybe yeah, I do not let the market just play out the way it wants to. So when I realized that through journaling actually, that I was maybe closing the trade a bit early, that's when I just decided to let the trades to run to the full take profit. Now that's when I used around one month to pass my phase one account and 1 week or 2 weeks to pass my phase two account. So that's the mistake that I was doing. It is just fear. I think fear is something that you just need to air out from your trading. So yeah.
And between all these challenges, which one did you struggle with the most? Najua sometimes you recognize that you have to change. and you know that I have to stop over trading or over risking. But again, there's a, I don't know if it is human nature, that, but when we are in the market, you find yourself, going again in maybe 5%, you are breaking all your rules. So what is that one psychological, hindrance that you struggled with the most?
Something that I really struggled with is closing the trade early. So I did not really struggle with the risk management because I was really afraid of maybe blowing an account within a day. So something that I really struggle with is closing the trades maybe at 1 to 1. That mistake really made me stay at break-even phase for a long time. But yeah, when I aired that one out, just became profitable. My win rate increased to around 60% or 70% when I started to just let the trade run.
Now, when you are placing trades, then you are placing now your stops. What I came to know is that placing stops in itself, it is a skill. you know so for you, like, how do you place your stop, or are your stops informed? Do you place a stop at a certain key level in price action, maybe below a fair value gap or below a buy side or sell side liquidity? Or is your stop loss informed by maybe a minimum dollar amount that you want to lose? So maybe if you are risking 1% and the most you want to risk is 1%, so is your stop loss informed by that 1% or a level in that price action?
So with risk management, let's just enter first with the stop loss placement. Because I'm a reversal trader, I usually wait for a liquidity sweep. Now, immediately with the reversal, that swing low or swing high that is formed in the market, I usually place my stop loss right there. Now, with the risk management, if I want to risk 1% in a per trade, I usually use a position size in MT5. I just place it is just acting like a calculator in the market. I just place the risk that I want to be risking in the market and then place my stop loss and just calculate the lot size or the amount that I'm going to be risking or placing in the trade. So yeah, it's just simple to just use a position calculator. So yeah.
It is on Thursday, it can be as well a busy day in the office. Like, how are you, approaching this trading? Like, what do you do? And do you have some things? John Onanga, there are people, who have things to do that keep them in sync with the market. Somebody may do some physical exercise, somebody, may go to some praise and worship. People have their own different things. So for you, like, do you wake up just go into the charts, ama na we ni ule mtu mwenye unapiga yogi kidogo ndio, you enhance that blood circulation?
So I don't really have let's say a morning routine like everyone else. But yeah, because I usually trade the indices and according to our time zone, the 9:30 open is usually at 4:30 p.m. here. So maybe a typical day in a life is maybe I just wake up. Maybe if I have classes, I go to school. If I have nothing, I just stay in the house. Then before 9:30 open, maybe just 1 hour before 9:30 open, I usually just do the higher time frame analysis. Then just break it down, see what I'm going to be expecting in the market. Nothing really. I just enter, just trade, then just close the day and move on.
Just as simple as that.
Yeah.
That is interesting. So we are almost at the end of this, and but I have three general questions that I feel I should ask you, and you are just the general feeling, how you think about it. So my first question is, what is the best advice that you have ever received about trading? and how did it improve, your trading, your trading?
The best advice regarding trading. So
Mm-hmm.
I've really watched a lot of podcasts concerning trading, just risk
Mm-hmm.
management and just trust the process. So with trading, you have to give it time. Something that we usually do as a mistake at the beginning of trading is maybe try to get rich quick. But this is just a process that you just have to follow. So with trading, maybe give it time around 3 to 4 years actually before you become profitable. Just give yourself a little bit of time to be able to be in sync with the market. Follow rules and yeah, just follow your rules and everything will just be fine. So,
So, from the experience that you have now, then if you have to go back to do it again, like what are some of the things that you know now that if you go back, you will not do the same?
yeah.
Or let me phrase it more accurately. Like, what will you do differently from what you did when you started?
So some of the mistakes that I did at the beginning was using trading signals. I almost entered into trading signals and I lost some money, but yeah, trading signals was something that it is just a short-term mindset. But if you want to stay in the market of trading for long term, you just have to seek knowledge and just trust the process and yeah, everything will just be fine. That is just some the mistake that I did at the beginning. But yeah, I'm still in the process, so we'll just see how it goes. I'm just still learning. The mistakes that I made at the beginning, maybe over trading, over risking, it is just something that you just learn as you just continue in trading. So yeah, you just learn and move on. Yeah. But another advice that I really had was journaling. Journaling is really important. Actually, I think that is the most important thing in the market because through journaling is how I found my strategy. If I wasn't journaling the trades that I for testing, maybe right now I couldn't have found the trading strategy that I'm using. So journaling is very important. I think that is the most important thing in trading.
So, very interesting. So the last question is, which one trading resource that has been very beneficial to you and you can be able to recommend to somebody who is, also looking to enter into this industry?
So at the end of the day, we all want to get rich with trading. So if you don't
Mhm.
really have that much money, I think prop firms, you should really consider using prop firms. Then just risk management.
Okay.
And with journaling, I usually use Notion. Notion is a nice website or app to use journaling your trades. So yeah, that's some of the things that you can get.
Very interesting. And you also mentioned that you are in school. So coach, you are happy man.
Yeah, I'm studying here in KC University, Nairobi. Uh, I'm
Oh,
studying computer
okay.
science. So yeah.
Apo Thika Road.
Uh, dapat.
Very, very nice man. Very nice. Very nice. So, man, I really appreciate that you have shared this. I'm very grateful. You have been very insightful, and I'm very sure some members will pick some one, two, three things that they will take home, more especially on journaling, on risk management. So, I think you have also been a very big resource and a very useful resource today. So I want to thank you, and ladies and gentlemen, that is the end of this episode. If you like this episode, you can give me a thumbs up, and also you can be generous to hit that subscription button. So until next time, peace.